Right, ladies and gents, how are we doing on this fine, sunny summer's evening? 5 to 6. We'll get started in a few moments. Let's have a little look while everyone's just getting on board. What's going on with the markets? Let me just check my microphone's going. We should be good to go. Okay, so Pepperstone have the S&P 500 CFD up 1.7, a huge 1.7 points up. Dow down 50, futures are flat. It's a bit of a chop fest. I think everyone waiting for Nvidia. Is a whole world economy resting on Nvidia on Wednesday? It may well be. Does the AI train the bull train keep running, or does Jensen throw a spanner in the works? Let's see. I mean, obviously we've got a few more days left of August. We've got a few more important data points to come out. Then we have Labor Day, I think on the 1st of September, is it? It's on that Monday. And then I think everyone kind of goes, right, that's the start now of let's get back into the swing of things. We've got the data we need. Everything's out. Let's see what the run's like in September. Let's see what's going to do in Q4. So let's see what happens. Anything else exciting happening? Crude oil's down a bit. Any crude traders out there? We're down a couple of percent on crude. We have a few individual stocks swinging around, but I think everyone's in holding pattern. After Jay Powell put a rocket up the butt of the market the other day, we've kind of just been sitting around going, what do we do now? We haven't really given much. We gave a little bit back. We haven't given it all back. We're sort of in that no man's land of pretty much the midpoint. We saw inside day, effectively inside 2 days. So we'll see. Most traders will have the high of that Jay Powell move marked off, the low of, this is the Jackson Hole speech, by the way, the high and lows marked off, and let's see how that resolves. If we're in the middle of that when Nvidia comes out, that then becomes the next focal point and kind of pivot area. At the moment, we kind of want to see, there's a reasonable chance that a very high chance actually we get the cut that we're looking for in September. The market's looking for, should I say. Now we need Nvidia to play ball. If that doesn't, how does the market respond? We'll get much more clarity anyway over the next couple of days. And then, as we go into kind of first couple of weeks of September, things may well resolve one way or the other. You crypto traders are having a bit of a rough time at the moment. I don't really look at Bitcoin, but that little sneaky move above the highs, trapping a few of them rolling over. I wonder what will happen from there. It's a bit quiet, isn't it, crypto at the moment, after that little run, but we shall see. Right, today we're going to finish the webinar series that we started at the beginning of the month, and more on that in a moment. I'll introduce myself in a moment for those of you who don't know who I am. Thank you for joining me. We'll get started in about 30 seconds. Well, let me just make sure that everything's dialed in from a technical perspective. We had a few technical problems earlier, but sorted out. We are back on point now. Let me just check here. Yes, we are good to go. All right, I would like to share with you an extract from Linda Rashke's book. There we go, Trading Sardines. Okay, and Linda Rashke, if you don't know her, I think she's one of the traders who inspired me the most through my journey. When I started trading in 2001, I used to look at her stuff and watch some of her webinars and really study kind of how she traded. She's more technical than me. She's a much more technical based approach. She likes her indicators, but super successful trader, really interesting character. Anyway, she's written this book, which is more a story of her kind of more lessons in the markets from a lifelong trader. And I really enjoy these type of books because most of the time they share their journey, sort of cover things that are going on in their life at the time, some things they're more interested in. And so there's a nice human element to it. One of my favorites up there is Pitbull. I really enjoy that one. And the yellow cover, I'm not sure if it's there, but Pit to the PC, I think it's that one. And that's a great book by Louis Borsellino, ex-floor trader. Again, a trader who didn't know much about, but used to listen to him in a trading pit and have a squawk feed that would come through, listen to what he was doing. The squawk audio guy would call him number one local, because rumor has it if he ever shared his name, he's going to throw him in the Chicago River. I don't know if that's true. Anyway, here's a little extract for you from this book, which, by the way, you couldn't buy from Amazon when it first came out. I believe Linda wanted to just self-publish it and didn't want to put it on Amazon because for whatever reason. It is now on Amazon, but I did check earlier on and I couldn't see it in the UK Amazon store. Well, I could see it, but it said it wasn't available. We don't know when this item's going to be back in stock. So if you want it, set an alert maybe on Amazon. Or there's one guy reviewed it for 1 star, and he said there is nothing about trading. It's more about how she lived her life beside trading. Well, no beep Sherlock, mate. That's exactly what it says on the back. Anyway, let me give you a little bit of a. I think it's worthwhile. I think it's a good read. Okay, a little bit of an extract here. So Linda's talking about her journey as a trader, and she's kind of going through, and she's saying, one time she just could do no wrong, and she was doing fantastically well, and the market was kind of behaving, and the trades were lined up, and everything was fantastic. And then next month, she wrote this: "Thank you, sir. May I have another? The market sucked me under the riptide, and each time I came up for air, I was hitting the crest of the wave instead of the trough." It's like, have you ever been surfing? You go surfing, you kind of get bashed under, then as soon as you come back up, if you're kind of getting whacked in the face by another wave, you kind of can't catch your breath. So great little analogy there. Anyway, in a few days, I dug a 7-figure hole. Ouch. I was well on my way to digging to China. Every trader has been there. Can I start the week over again, please? I promise not to get out of bed this time. I was feeling demoralized when my daughter called me. She lived a few miles away in the West Loop of downtown Chicago. I told her I was super bummed at my loss of discipline and that it had cost me dearly. There have been many times during my career where I made mistakes and ended up depressed for a few days. I know the routine well by now. There is little one can do to shake it off except to wallow in it until it disappears, like a thick San Francisco fog finally lifting. Time, the magic cure for everything. So why do I kind of share this with you? Well, I think there's a bit of a myth in the trading world, and this is kind of as developing traders tend to think this. And listen, I thought this myself years ago, is we have to be absolutely perfect. We have to be making no mistakes. We have to have our discipline with ironclad. And of course, that's the goal we're trying to get to. However, why I mention this, and I've read extracts from all these other books, some of these books I've shared with you before, guys. If you read the Market Wizards book, you listen to interviews with some of the really big hitters, hedge fund managers, people at the top of their game. And I consider Linda, she's kind of backed off a little bit now, and she's kind of enjoying not so active role in trading, I believe, but she was at the top of her game, right? And she's still an excellent trader, of course. But the point is here is even she mentions, listen, I was super bummed at my loss of discipline. It's going to happen. And so the objective with these webinars, especially this series and today, is we're not trying to become perfect. It's impossible to achieve. And so the frustration sometimes that many traders have is that we're trying to chase something that is unobtainable. And even to be one of the best traders, I class her one of the best traders in the world. She was saying here, I was super bummed at my loss of discipline and it cost me dearly. And another mention, I talk about this, like let the emotion dissipate, exactly what Linda says and puts it in a perhaps more eloquent way than I, which is there is little one can do to shake it off except to wallow in it until it disappears. And she goes on about the thick San Francisco fog finally lifting. Time, the magic cure for everything. And so when we talk today, and I've talked in other webinars about the emotions that we feel in trading and the frustration that we can feel and the anger sometimes, resentment, disgust, all those things, that is normal. It becomes less and less as you improve as a trader, but it's still going to be there at some point. And recognizing it, if we go back to kind of the self-awareness episode that we did, the webinar we did then, it's recognizing it and stepping back and not letting that do any more damage to your trading, but instead letting the emotion dissipate, whether it takes days, whether it takes minutes, whether it takes hours. We'll talk about some kind of drills in a moment. But why I really wanted to share that with you is that it's okay to have a lapse in discipline. It's okay to make errors. You are going to. And so while we approach this and we try to come up with the best ways of have our mindset as robust as possible, and we're taking some of the kind of mantras from the Stoics and stuff, there is never going to be perfection. And what I kind of really want to drill home is that if we chase that adds to the frustration. Why can't I stick to my rules? Why can't I do this? improve over time and make it a habit to craft improvement and forge resilience and all that other stuff that is going to help you trading. But there's never an end where you go, everything is perfect. It'll get easier. And as Linda said, she's been there before. At times when discipline's not on point and emotions running high, let it dissipate. Time sorts it all out. So hopefully that puts things into perspective, what we're trying to achieve here, that we're not trying to be perfect. We are human beings. We're going to make mistakes. We're going to make errors. Okay, so with that being said, where are we? I'm on the wrong screen. I'm on the right screen now. Okay, talking today about harden the trading mind. It's the final step in our Summer Stoic series. First of all, before I introduce myself, let me remind you guys that spread betting, CFDs, any leveraged instrument that you may be trading, super high risk. Please understand the double-edged sword of using leverage. It works very, very nicely when it's in your favor. You're long, you're using your leverage, then you're obviously going to do very well. But there is a flip side. If things go against you, they can get nasty very, very quickly. And if your mindset's not on point, you can end up holding losers a little bit longer than you want to, doing things you shouldn't do. There's gap risk, there's this risk. We try to the best as we can to reduce the risk in trading, stop losses, position size, understanding where the hidden risk is, gap risk, overnight risk, slippage, etc. But we can't eliminate it completely. So just please understand how the instrument you're trading works, and that you're okay with the amount of money you've got on account. You're okay with losing that. You need to be aware that this is a risky business. We're trying to steer the ship in a direction, but there is a double-edged sword of trading with leverage and trading on margin, and it takes time. Things do take time. Okay, so first of all, quick introduction. I know many of you here know me already. My name is Mark Holstead. I've been a trader for almost 25 years now. I traded through lots of different cycles, different market conditions. When we're chasing Bin Laden, flash crashes, crisis here and there, everywhere, bull markets, bear markets. I just missed the bull market of 1999, the internet boom. I hear a lot of, I kind of was brought up reading the bear market, or brought up. My trading kind of was forged in that bear market as we were rolling off those highs. But I spoke to a lot of traders who kind of were in that environment, and it was wild times. But we've had plenty of wild times since then. So I'm kind of here to share with you lessons that I've learned on the journey, the way that I think of trading, the kind of framework that I apply to my trading, whether talking about technicals today, the mindset stuff. Now here we're taking a bit of inspiration from the Stoics with this Stoic series, but also as well, I come from a very unique perspective in that I have a lot to do with other traders, some fantastic traders, some struggling traders, and all in between. And I can kind of see and mix and match what I think is working, what's not working, different personalities, types, different styles, different time frames, different conditions, different everything, and say, okay, that seems to work for people. Let me share that, even if it's not something that I've ever been through or I've experienced. Hey, I'll share that with you because I've noticed that people have got over that struggle by doing that. Or something, so I can kind of mix and match quite a bit. And my idea is to, or my objective, should I say, is to share with you things that are going to help you move forward in your trading. So we do these webinars weekly with Pepperstone. We talk about different topics, different ideas, whether it's technicals, whether it's mindset, whatever it might be. And my real objective is that you take away one or two things in the webinar that can help you improve your trading, because things take time, right? And often it's that little spark of something in your brain. You go, that's an interesting way of thinking of it. I hadn't considered that. You must look at things through a different lens or a different perspective, and all of a sudden things become clear. And often that's the case with trading. You have this stagnation or struggling, and then you have a breakthrough, and you kind of have a good few months, and you kind of stagnate, and it's just kind of constantly applying that steady pressure onto evolving as a trader. Okay, with that being said, let's get down to business. This time, ladies and gents, I do encourage you to add your questions. There's a Q&A button section somewhere on your screen. I think it looks different to mine. If you want to add your questions, this is going to be, I'm going to make sure I answer everyone's question with this. If you've got any question about mindset, if you've got any questions about FOMO, about discipline, about anything to do with the psychology of trading, I will do my very, very best to answer, of course, any questions about the webinars or in this series, the webinars, any other webinars we talked about in this series. Okay, so Epictetus said this: first say to yourself what you would be, and then do what you have to do. Now, the reason I say this, and I don't mean to come across as being harsh, but for some of you, it's time to get it done. And I say this because I remember looking at myself in the mirror 20 odd years, maybe not quite, yeah, probably 20 years ago, and saying, if you are going to keep breaking your rules, if you're going to be the trader who doesn't stick to his plan, who rashly oversizes, which was something that was a real challenge for me, rashly oversizing, over trading, then there's no point in carrying on. You either need to get this done and deal with this hurdle, or there's no point in continuing what is something that you really enjoy doing and something you want to make a really, really big part of your life. So, for some of you, you may be really, this is it, man. I want to get into trading. I love it. I love the markets. I love trading. I love what it's all about. But you've been spinning your wheels and going around in circles for so long. At some point, you have to get a grip of it and go, I need to get over this hurdle. It's time. And now is the time to do it. It's the time to build the resilience and fortitude and accept no more excuses. And again, that's why I mentioned this. We're not about perfection. It's not about being, a robot and being emotionless. We don't want to be that. That's pointless and it's not achievable anyway. But it's about doing the work you need to do. And we're going to kind of summarize some of the stuff we've covered in the previous webinars today. I'll offer you some more ideas. But none of this stuff takes much time. It's just a state of mind. And so if you're struggling with discipline, if you're struggling with overtrading, you're struggling with FOMO, hesitation, all those things that we kind of capture all into one, then it doesn't take much to work slowly towards breaking that. Here's something that's the truth. It won't magically fix itself. You won't magically wake up one morning and go, oh, you know what? I never FOMO into trades anymore, or I never hesitate anymore, unless you do the gradual work. And then you'll realize improvement. You'll go, hang on a second. I haven't hesitated in quite a while for trades. Oh, that's interesting. I've not felt that FOMO for a while. And that's what you want, that steady progress that finally has that delayed impact on your P&L and your performance. And you say, actually, you know what? All those visualizations, all those kind of ideas and thinking about trading and reviewing and doing all these little bits or picking and choosing the ones that work for you, it's not taking a massive amount of time, has finally started to rewire my brain. I've started to unpick some of those bad habits and really kind of direct your focus and attention as to where you want to be as a trader. And sometimes it is just the brutal truth of saying, you know what, I have to get this done now. There is no point in me continuing. So the timing of these webinars was intentional. August, generally quiet and stuff. I know we've had a few little bursts of volatility, but that's the generalization. And there is, I know when you back test it, actually there's some volume here, but the way it tends to look at it is that September tends to bring a little bit more price action movement. It tends to be historically slightly weaker. Last year was slightly different because of the kind of bounce off the August lows. But generally speaking, there's, Labor Day marks the start of a kind of transition period in the markets. And the reason we kind of did these webinars over August and ideas for stop this thinking and kind of get your mindset on point is that you can start to improve it. And something I'll ask you to do is to start to improve your mindset and psychology and all the stuff that is going to help you as a trader throughout September, and worry and make mistakes and go 2 steps forward, 1 back, 3 steps forward, 1 back. Just kind of work it all out so that when you hit Q4, you start to see the benefits. There's always a 30, 60, 90-day lag on anything you implement in life and trading specifically. You've got a 30-day lag. We don't get the instant results we want. We all like to think, oh, I'm sitting on a Sunday evening and working out what I'm going to do next week. It doesn't work like that. You have to keep the pressure on so that 30 days down the line, you start to see the results coming down the pipeline, right? And so the idea of this is that the August kind of time period now, learning all the stuff, you'll get all the recordings and bits so you can take away bits you want, test it through September. Then Q4 is when you're going to see the benefit if you start to do the work now. And I know I'm kind of looking further ahead, and a lot of people are like, well, what are you talking about, 2026? But the idea now is we start to think like you true traders and start to put the work in now so that we see the benefits Q4. We start to see the momentum pick up in Q4. So you go into next year. I know it's early to be talking about it. I admit it. But we go into next year then with momentum. Because if you go into next year, the same state you are now, if you are developing and you are struggling with certain things, it just feels demotivating, and you want as much motivation as you can. And so this is why an intentional timing here of let's realize things take time to develop. Let's use September to really put these things into action and to deal with any psychological challenges or hurdles you may be going through now, so that you can reap the rewards in Q4, build momentum going into the start of 2026. Okay, so let's recap this journey quickly. Week 1, we talked about focus, so commanding your attention, all about concentration, easy to be drawn elsewhere. Talked about external influences, talked about chart-based influences or price or trading-based influences, news, price action, etc. Putting those together to really cultivate that focus and attention, because I believe the human brain is super, super powerful when it's really, really laser focused in one point. We know it's like, as you get distracted, everything. This has got your attention, that's got your attention, this got your attention, and it's all about keeping that absolute laser focus and giving yourself the best opportunities and the quickest route to where you want to get to. Week 2, we talked about awareness, so sharpening the trader's eye. What I mean by this is understanding your emotions, understanding what's influencing how you're feeling. Are you feeling frustrated? Not squashing it down like like a beach ball that pops back up in your face, but saying, hey, you know what? I'm annoyed I missed that trade. I am. And accepting it, just like Linda does, it's okay, but being able to then not allow that to pollute your next trading decisions. Week 3 talked about resilience, and that's kind of hardening and sharpening that mental armor, or toughening the mental armor is better than having sharp armor, right? So that you're not really impacted as much by stuff that would impact you before. So now we're kind of building all these things. And today we're talking about hardening the trading mind. So it's kind of bringing these all together, but also thinking about your trade slightly differently and thinking of these 3 kind of triads or these pillars that really support your trading psychology. We're okay to be imperfect. We're not trying to seek perfection. We're just trying to get better at concentration, at self-awareness of who we are as a trader, at resilience. And so those there can help you, whether you're scalping crude oil, whether you're swing trading crypto, whatever trade you're taking, you have that mental kind of mindset and approach that separates you from the pack. Because any of these traders here, we talk about Linda Rashke, we talk about any of the market wizards, we talk about some of the traders that were covered in the playbook by Mike Bellafiore, we talk about some of the old market wizards guys, we talk about all these kind of books here, and I've got tons everywhere. These traders all have one thing in common. It's not strategy, it's not a performance, it's not risk adjusted returns. It's that these guys and girls have been in the business for a long time, and they all possess a mindset that serves them and their trading, whether they're trading in the pit, whether they're trading on the screens, whether they're scalping, swing trading, as I said, whatever. It's the mindset that is the common denominator. The strategies are all different. There's none of these traders you talk about, none of them. Think about all the traders in the market wizards books, and I recommend those if you haven't read those. All the traders, none of them have the same strategy. They all trade very, very differently, but they all have that mindset dialed in. So that is super, super important. Okay, so here's another, we're taking sort of, inspiration, if you like, from the Stoics. But that quote there from Epictetus, this is one of my favorite quotes from Marcus Aurelius' Meditations book. And I like to kind of, from a personal perspective, I like taking this mantra into everyday life, as well as flipping it on its head for trading. It's kind of a perfect thing for me. I've got it as a wallpaper. I've got it kind of in a way, because a lot of people know what to do and know the things about the theory, but don't put it into practice. And Marcus Aurelius said this in a perfect way. And don't forget, Meditations wasn't a book to be published; it was notes to himself. And so he was thinking the same thing as you and I both do. And this applies obviously male or female, right? It's waste no more time arguing about what a good man should be. Be one. And the same with a trader. Waste no more time arguing about what a good trader should be. Be one. And that really is that catalyst of saying, I don't need to worry about the intricacies and the details and get bogged down in the weeds. I just need to become the trader I'm trying to be. And it just takes time. And yes, I'm going to make mistakes. And yes, I'm imperfect. And the Stoics always said that there was an imperfection. There was times when you did things that you wondered why you did it. But that doesn't matter if the majority of the time you're doing the right thing and you aren't arguing about, oh, the good man should do this, good trader should do that. It's like, you know what you should be doing, and going back to that kind of point of looking yourself in the mirror and saying, do you know what? I just have to get it done. So these Stoics knew this. And I think that taking that from a kind of mindset perspective and saying, okay, no more arguing about it, no more contemplating, it's time to get down to business. And actually, it becomes less about contemplating and more about frustration. Thinking about, why am I still breaking the rules? Why am I not doing this? Why am I not further on than I could be? And it's trying to eliminate that thought and saying, okay, I am where I am, but I'm going to move forward. There was a principle called the Stockdale principle. I wrote an email about this on the Daily Email a while ago, and every now and then I kind of bring it up again. And there was I think it was James Stockdale. I never forget, I remember his first name. He was a prisoner of war in Vietnam, and he had this idea of, hey, do you know what? I am completely honest. I'm completely honest about the situation I am now, which is dire. I'm being tortured. I'm, not eating food. I'm just in the worst conditions as possible, right? And I'm not going to pretend I'm not. However, I'm super optimistic that I'm going to get out of this. I'm super optimistic that actually there's a future where I'm with my wife and kids. I'm walking on the beach. I'm eating a plate of nice food. I'm free to walk, whatever it might be, right? And that a lot of businesses take that, and traders, I think, should take that on board too. It's like being completely honest about where you are now and saying, you're not kidding yourself. You know what? I need to do work on my discipline. I need to do work on, over trading, or I need to do work on my hesitation. Fine. However, I'm so optimistic about where I'm headed if I fix that. And that combination is very difficult. You find a lot of people who are optimistic blindly with no real reason to, and they got to lie about where they are now, their current situation, and they stay in the same place. I'm a great trader. I'm a great trader. Well, you're not. Well, I'm a great trader. Well, you're not. Well, you're not. And your subconscious doesn't believe it, right? But if you say, you know what, I'm not where I want to be now. However, I'm headed there. So a little bit of off-piste travelator there. Travelator? What do we call it about? That's a Ninja Warrior travelator, isn't it? Traversing, that's the word I'm looking for. Traversing off beats. Okay, so from tools to instincts. So you've got the tools. Now we want to hardwire the brain. Drills, habits, automatic responses. Let's run through a hypothetical thought process if we were driving our decisions from emotions, and then how we might flip it on its head from a Stoic perspective. If you remember last week or the week before, I shared with you what I think is a really good drill to do. When you finish the trading day, you run through the trading day from an operational and technical perspective. So you do one pass through the chart and you say, yeah, that's a great long. Oh, look, I didn't notice that bullish engulfing. Oh, look at that pullback to the VWAP there, or whatever it might be in whatever time frame market you trade. Fine. You do the one pass, and the second pass you do is from a mindset and emotion perspective. How did I feel then? I felt like I missed that trade. I felt like I was chasing that. I felt like I should have got on that. I felt like nothing was happening. And running through what your brain was saying to you rather than the technicals. Two passes, same chart, but you get very different results. So let's keep on that theme today. So emotionally driven, you get a pattern. Often your heart rate is spiking up. I had a conversation with Brett Steenbarger on my podcast, and one of the things he said was attaching yourself to these not binaural, biofeedback devices. I knew it was buy something, and it wasn't the other buy something, and attaching yourself to these biofeedback devices, and you recognizing that, hey, traders who are emotionally driven, who perhaps don't have their mindset on point, perhaps are feeling a little bit anxious about stuff, heart rate spiking, blood flow is coming to the frontal cortex, all this kind of stuff. So there's a physical response when you're not in that kind of relaxed state. So you see the pattern, your heart rate spikes, maybe you get more anxiety, your mind starts to flood with what ifs, fear, etc. And actually, you might not necessarily articulate that or realize that, but that's what happens. So imagine now, if you I just picked a random day from this P500 futures here. I think it was a few days ago, but you should think about this from and this is a good test to do, because it highlights sometimes how you think about trading when you don't realize you do. So you run through this and imagine how you'd perceive all this price action if you were operating from a place of fear, right? So you go through the exercise. What would you be thinking? Market's selling off. I should have got short. Maybe I'll get a pullback. Maybe I'll, actually no, maybe I'll wait for the long. And there's a nervous feeling of, I feel like I've missed the sell-off. Why did I not spot the short? Should I be looking for the bounce? And there's a confusion, right? And again, we're kind of role playing this mind of purely emotionally driven, purely from a perspective of I'm letting my emotions guide my decisions. And the reason we're doing this is so we can identify when we go, hang on a second, sometimes I think that. So we see the sell-off, it starts to go, and we go, oh yeah, it's bouncing. I'm gonna get long. I didn't get on the short. I didn't read it. I'm gonna get long. And so maybe you end up buying the trap. Then you happen to getting stopped out on there. So now you're frustrated. You have one loss under your belt. Maybe you try again. You get stopped out. So we can go on these different pathways of multiple stops starts to create the frustration and anger. Rewind it again. Maybe you see the sell-off, you were waiting for the short, you missed it, and now you just jump on. But now you're nervous because any kind of flick back up, you want to cover the trade. And so going through these different permutations of how you perceive price. And by the way, replace this chart with your market and your time frame, whatever that is on, whatever that might be, and it's a 2-minute exercise. Just going through imagining, I'm the worst trader. I operate from a purely space of emotion. How would I perceive this? And then you kind of run through it and you basically shines a light on some of that thinking that you know is there. And so you're trying to avoid it. And so you'd see the sell off. I missed the sell off. Oh, I'm going to get long. Oh, I've been trapped on this. Hey, it's bouncing. I'm going to go, I sell the retest. Oh, I didn't see the tape shift. Oh, I sold the VWAP. Oh, I think it's going higher. And that's the indecision. You can run through this and you know how it's so easy to slip into that mindset of, I don't really know what's going on. I'm nervous. I've missed this. What do I do? I feel like I'm frustrated. I feel like I'm missing out on a trade here. This is the only opportunity I'm going to get today. I need to get on this, or from a hesitation perspective, maybe that's more your thing. I saw the pullback and retest on 0.3 there, but I hesitated, and by the time it's gone. I've missed the trade. And so whatever it might be to you, it's running through and putting that dial up to max, so you can actually see what that negative self-talk is like and how that emotion can cloud your judgment. And remember this, grab this slide from last week because it's so important. Control the controllables. Some things are up to us, some are not. Epictetus said this. And running through this, and we're going to run through another one in a moment. But your edge begins where your control begins. And just like if you ran through that with extreme emotion, you realize how silly it is. Like, you can't control what price is going to do. We couldn't control that we were going to see that kind of tape strength here at 4. I'm just kind of highlighting stuff that I think is important. You may look at the chart differently. That's okay from a price action operational perspective. But you don't know where the bottom's going to be. You don't know if that if that break and retest is going to hold. You don't know if the VWAP's going to hold. We don't know the indecision is going to kick in. We don't know any of this, right? And so we can't control it, but we can control how we perceive the price. And that is such a freeing perspective, in that, hey, I can command how I think about this, but I can't control the market. That's why so many traders struggle, because the outcomes are so uncertain, and they're trying to put their will on it and say, this setup works, this flag always works. And really, we don't know that. We're playing the game of odds. Now, if we have a hardened mind and a more stoic approach to trading, we're much clearer and calmer, and we see things and perceive things with certainty. Now, when I say certainty, I don't mean a certainty on the output, but a certainty of, I'm making the best judgment I can do with the information I've got at the time. And that might be, by the way, and the default setting should be, I don't know what's going to happen. I don't know where we're going to go. And that's such a freeing position, because you can see the market kind of unfolding and you go, I don't know if we're going lower or higher here. However, the next sequence that develops, and you start to then think like a chess player, think a little few moves ahead. And so if we kind of rehearse this from a sort of hardened stoic mind, the pattern appears, you see the trade. How do you feel? What's the play? Where's the risk? And so you're thinking of it through a different perspective. And we're running through these different kind of exercises of pure emotionally driven, and now pure clinical, stoic, hardened mind, toughen. And the idea is that we're going to get somewhere in the middle, and hopefully more over to a more objective assessment of price, as opposed to pure emotional assessment of price. And the point of this is to highlight the two extremes and to say, right, there's my North Star, that's my South Star. I don't want to be that way. I want to be more this way. And having those kind of pinpointed, now you know what that self-talk feels like. So now we're watching this and we're saying, okay, I missed a sell-off, for example. I missed a sell-off, I'm not sure. Okay, do I want to maybe I want to get short on a pullback here? Do I want to kind of wait for the pullback? Or do I want to wait now for the long? Maybe, and this is all these are fine, by the way. Maybe you say, you know what? I feel like I missed a short. We're in a bull market anyway at the moment. I don't want to chase this. I want to wait for the tape to shift back round, and I'm going to kind of get long. So what do I want to see? And so you're starting to think more from that hardened mind perspective. You don't see and perceive price as a threat. You perceive price as an opportunity to develop into something more. And so you don't look at that sell off and go, oh man, I missed it. I can't believe I missed it. I need to get short, or I need to get long before it's going to bounce without me. You start to be calm. You say, what do I need to look for? Well, I'll kind of look for some sort of bottoming pattern. Maybe I'll look for a men's ignition. Maybe I'll look for a higher low. Maybe whatever it is to you. And it doesn't matter what you're looking at. But the point is that you can't control price, but you can control how you perceive price. And so the hardened trader's mind looks at things from a different perspective, doesn't see anything as a threat, doesn't get scared or anxious by any price, just calmly looks at it and says, what do I want to see? Do I have a trading setup that's going to occur? Do I need to see the market go through another regime, another sequence? Does the sell-off need to finish and then bottom out and then I look for a long? Do I want to see it? So you start to think in terms of sequences, and you start to recognize that, hey, price doesn't command how I think. I can choose how I think, how I perceive stuff. And so now we kind of look at these two different polar opposites and think about how that works for your trading. Like, how do you perceive price? And the kind of key point here is to recognize, where's your weak spot? So are you weak? If you see this kind of selling off, are you kind of like a trader who likes to jump on short momentum? Are you a trader who feels like there's FOMO here? Are you a trader who hesitates on stuff? Where is that kind of weakness in the armor? So that's where you can divert your attention and your efforts to improving. Okay, so think about now how we kind of spot that mental noise. So you go through that exercise, and again, I try and give you stuff that's minutes. So there's no real pushback. Like, you literally have to sit down, set a 5-minute timer, run through it from a pure emotional perspective, run through it from a pure clinical or operational observation perspective, and look at the difference. And then recognize again, where do you fall short? What normally is your struggling or your challenge in trading? Are you chasing stuff? Are you doing this? Are you chasing it and worrying about the trade and then coming out? Whatever it might be. Right, multiple permutations, but yourself. And so how we go through the normal trading day in a live environment, we're now able to say, hang on, is my voice, is that mental noise more in line with the kind of fear-based, anxious trader that we've role played there? Or is it more the clinical, stoic, tough, looking at it from a pure objective perspective? And again, we don't have to be perfect. We're never going to be perfect. It's like Linda says, but we want to kind of move that needle more towards that calm, considered review of price, so that your experience and your judgment and your intuition kind of flourish. Because as we've talked about many times before, if you're operating from a perspective of emotion, if your decisions are clouded with emotion and tainted with emotion, you're never going to make the best decisions. So spot that mental noise. I'm missing out. I can't take another loss. That's if you had a series of losers. That's a big one for many people. This is the trade I wanted. I'm going to miss. So it's just, again, going back to the kind of week 2 was, being really self-aware and recognizing that very, very subtle change in tone of, hey, that's selling off, I need to be on it, versus I'm missing it, I need to be on it. It's a subtle shift, but the difference is, hey, I perceive this price has got a lot more to go. I'm waiting for this pullback, or I'm going to take this breakout, whatever it might be, within line with your plan and idea and strategy, versus I will feel crap if I miss this. I need to get on somehow, and there's a tinge of urgency with it, and it's very different for every trader. Sometimes it's tainted with hesitation, but sometimes it's tainted with urgency. You have to recognize that, and going through this process helps you highlight these things much, much easier. Okay, so when you do have that, and you will have it, listen, I've been trading for 20 plus years. Guys have been trading for 40 plus years. They're all the same. We'll have a situation where you go, I'm feeling a little bit like I want to get on that too much. And it's acknowledging it and going, you know what, you're a little bit too eager for my liking to get on that. And I know where that ends. That's not the kind of trader I want to be. And so when you do have that noise creeping in, you acknowledge it quickly, you name it and go, listen, that's that's that revenge trade. That's that FOMO talking about. That's that call yourself a trader if you aren't on this massive move type thing. And you know what? Very often intraday traders, that's why intraday traders struggle with trend days, because monster trend days are often the nemesis of many intraday traders because you feel like you should be on it. The Dow's up 700 points, the Nasdaq's up however many hundred points, and you see it's in a straight line. You go, you should be on it, right? The market's moved so aggressively. Why are you not on it? But in reality, most traders do better on a rotational market. There's some volatility, there's some action, but two-way trade rather than the grinding trade. And that's why very often the nemesis of many intraday traders is the trend day, because it's the noise that says you should be on this. And so they start trying to short it, or they start trying to buy highs, or they just get frustrated. And even if they're good and they sit on their hands, there's even that thing of, well, I should have done more here. And it's also just acknowledging the weak spots, acknowledging the vulnerabilities in your trading, just like, if you're a Roman general in charge of multiple armies, recognizing that, hey, you know what, that platoon isn't very good in that battle environment or whatever the hell it is, right? It's understanding that and it's acknowledging it, and you can't change it, but you just have to be very self-aware. And a kind of 5-second thing is, this is a kind of an advanced drill to do once you kind of get things more dialed in, is just say, do you know what? I'm feeling a little bit anxious about that one. We've got NFP coming. You're too eager to trade, pal. Step back, breathe. And these little tiny micro adjustments throughout the trading day or the trading week, that's then all you need. And now, sure, now and then you might take a trade. You look back and go, yeah, maybe there's a little bit too eager with that. There's probably a bit of FOMO there, but it becomes much more manageable. And that's the situation you're trying to want to get to, is that you're constantly evaluating these thoughts. You're constantly analyzing how you perceive price based on those drills. Is it full extreme motion? Is it kind of really clinical? And you look at it and go, you know what? I think this is a good long. I think it's a great place to get long. I see what I need. There's my stop. I can frame the trade effectively. I see the price action pattern I want. Yeah, that voice is talking from a perspective of judgment, from skill, from logic, from setup, from the trade. That's a trader in me versus, I want to get this, so I don't want to miss the bounce. Distinct difference, but recognizing that. And then just, if you do hear the slight different voice, it's saying, hang on a second, 5 seconds, breathe. And that's the advanced way. Now go back, and if you're kind of really struggling with stuff, that's when you step away, you go for a walk, you take longer. So just like Linda was saying here, it just takes time. As you get more experience, it takes less time. You recognize the challenge, dissipates, move on. It's not going to affect the next trade. If you are a developing trader who's something a real nemesis to you, you might need to take a day off, you might take an hour off, or whatever it might be. But again, self-awareness, recognizing what that is. Okay, so executing without hesitation. One of the good things about being so dialed in is that you trust your judgment. And once you, here's the thing, right? Once you are able to recognize when emotion is driving your decisions, you then know that the trade you're about to take is the correct trade. I don't mean the correct trade from whether it's going to be a winner or a loser. We don't know that. Okay, Epictetus says we can't control that, but we can control that. Hey, this is the setup I like. This is the regime I like. This is the conditions. This is the context. My risk is capped. Yeah, click. I'm happy to take that trade. And that is a much better place to be than second guessing. And the thing is with that is you're now also in a place where you accept the outcome much better. You're not so worried about whether it's going to be a winner or a loser. You're like, you know what? It doesn't matter, because I know that I would take that trade again and again and again. And the only way you can get to that place is if you have the kind of self-awareness of understanding how your emotions are driving your decision making. So bringing stoicism into trading, as this is the theme, as we're kind of trying to take some of the best parts from the Stoics, focus on what you can control. Right? We can't control price. We can't control if the next trade is going to be a winner. We can't control if you're going to hit your max loss on the trading day. You can't control if the trade's going to be, the best trade in the world or the worst trade, right? We just can't control that. We know this, right? I'm just repeating myself a little bit, but it's just reminding ourselves that accept what you can't. Price is going to do what price is going to do. Trump's going to tweet, news is going to come out, price is going to flick out and go the other way. Reframe adversity as training. So I mentioned this last week, and I want to reiterate this because this was one of the biggest things that just helped me, and I've seen it help so many other traders, is recognize you're going to feel some of this pain. You're going, pain might be strong, but you're going to feel, no, that's not strong, right? We're traders, right? We want this bad. And sometimes things sting really badly, like, oh man, why did I take that trade? Recognize you're going to feel that, but recognize it's training to improve. Every time you feel that FOMO, that disgust that you took that trade, that this, that, just say, hang on a second. That's okay, because every time I feel that, I will become a little bit better, a little bit better, a little bit better, a little bit hardened. And last week I kind of gave you a clip of this guy, Russian sort of Russian, there were like a grenade going off or a mortar going off nearby, and everyone's running for cover, and he's just there, pulls on his cigarette and he's chatting away, and he's like, and I said it a little bit tongue in cheek, of course, but the point is, he's so hardened to all this stuff, it doesn't bother him, and that's the point you want to get to in trading, where, stopped out on the low tick. Can you believe it? Full size clip, stopped out on the low tick, of course. And you've got to chuckle because, and the alternative route is you get angry and you get frustrated and you get annoyed and you have that impact your next trade. And it's not that trade that did the damage, it's the subsequent trades that you take whilst you're angry, frustrated, revenge trading. And so every time you feel the pain or feel that negative emotion, is probably a better way to put it, you reframe it and say, you know what, it's just good because I want to harden my armor. I want to become a better trader. I want to develop this stoic mindset that these things don't bother me as much, because when I'm an elevated trader, I'm trading a bigger size, trading all the stuff that you're trying to get to, potentially as a trader, up to you, it's your own goals, then it becomes less of an impact, right? And again, going back to the kind of the simple basics here of anchoring to the process and not outcome. And that's a very easy, flippant sentence to say, but it's very tough to do. And the more you can do that, and again, going back through that kind of drill where you go full emotion, full kind of process driven and not caring, the more you can go through that, the more you can realize which self-talk is in control. So the trader's triad, as I call it, focus, which we really want to keep that focus. Is very easy to be distracted, external things, people knock on your door, kids, partners, whatever it might be, telephone calls, this, that, the other. Maybe you're working, you've got a boss, you've got this, got the distractions. You want to eliminate as much as you can. I know that it's not possible to do that. Control the controllables. What can you control? What can't you control? Maybe you can go and do this disturb mode for a bit. Maybe you can put your phone on a mode where only the very most important calls come through. What market am I looking at? Again, focus, focus, focus. Awareness. This is a superpower, I believe. If you're self-aware enough to recognize when there's emotions tainting your decision making, man, you can do so much with it. You can just go, you know what? I'm feeling like I've got an urgency about me, but that's not the way I want to trade. I want to trade more relaxed. I'm not going to trade this. Breathe, reset, refresh. Okay, right? What's the next market regime? What's the next sequence that I want to look at? And then resilience of saying, test me, bro. Stop me out to the tick. Miss my fill. Give me 3 losers in a row. Come on, I want to be tested. Come on, hit me. Give it to me. Because that's the only way in the live firing environment, the live market environment, I'm going to get better. And so when you frame it like that, you're like, I can't lose, man. I can't lose. If you're going to kill me today and you're going to stop me out to the tick, you're going to hit me on max loss limit, I'm going to be frustrated. That's good, because that means that I'm hardening my mind. I'm becoming better. I'm becoming more seasoned, and I can withstand it. Next time it'll be a little bit less painful. Next time when you stop me out to the tick, it'll be a little bit less painful. I'll laugh a little bit harder. 3 losers in a row, max daily loss limit on the first 5 minutes of the day. Maybe there's an operational adjustment there, fine, and that's something else to consider. But from a mindset perspective, fine, test me, just test me. And the way that you frame that means that you nothing to fear, as long as your risk is capped, as long as you're comfortable with all that type of stuff, obviously. But it just means that the trading becomes much more of a relaxed thing when you go into it going, I don't fear the P&L. I'm not bothered on the outcome. It's a win and it's a growth, whatever. And I know it's a cliche. Oh, you learn from your mistakes. You learn from your mistakes. But you truly do, because even if they're not mistakes and it's just the market testing you, because you can trade perfectly. You can be absolutely buttoned down with your process on point and still end up hitting your daily loss limit or getting ticked out, stopped out to the tick. But that's the way it is, right? And there's being able to cope with that as a trader, that separates you from the pack. Because you think about the average person who's there, the average person's like, damn it, man, I stop. Right, I'm going to get my money back. Right, I'm going to trade something else. I'm going to do this and do that. that's extreme, but you don't want to be that. You don't want anyone like that. You want to be the calm person who they look at and go, how can you stay so cool and calm? You're like the guy with the grenade or the mortar. How do you stay so? I'm used to it, man. It's no big deal. Market stopped me out to the tick on the low print. I got 3 losing trades in a row. Completely misread it. It happens. It's no big deal. The most important thing is I don't allow it to impact my subsequent trades. And that's the stoic mindset you're trying to develop and cultivate. So some affirmations for you. Obstacle is the way. Process over outcome. There's a book actually by Ryan Holiday, The Obstacle is the Way. Process over outcome. I control my mind, not the market. Simple things to remind yourself. You're going for a walk, having a rest, relax before the trading day. Just repeat them. We talked about the 10 trade batches. That's an easy way to really unclip yourself from the actual outcome, right? So we process driven, and this is Scottish John was a big advocate for this. Do 10 trades, and you don't judge and adjust until you complete those 10 trades. Reset ritual for you. So if you need to, you come up with your own. But when you have that thought that's not really serving you, you reset. You remind yourself, hey, I can't control this. I need to just not worry about the outcome here. I'm thinking of this through much of an emotional lens. Reset. Next trade then should be process driven. So this may take a few hours or it may take a few seconds. It's up to you to decide how much the emotion is impacting your decision making and have some sort of reset ritual for that. So the idea here is that what we're trying to achieve is that we don't want to go on, we're free from tilt, we're free from hesitation, we're free from emotional noise, and the discipline becomes automatic. It doesn't mean it's perfect all the time, just like Linda said. You're going to break it, but that should be the default. So your objective now in September, if you want to do this, is to build it so that discipline is your automatic default setting, and very rarely you break it. Very rarely, occasionally, you might take a FOMO trade. Very occasionally, you kind of break discipline, just like Linda was saying. Right? And that's okay, it's normal, but the default is automatic. The default is discipline. The automatic kind of thinking is discipline. And going through those ideas and drills and going through and looking at how you would look at that from the extreme, like imagine yourself, hey, I'm a really crazy trader, I'm so emotionally driven. Maybe you know one of these people. Let me look at that chart and look at it through their lens, just to highlight how you think of some of this stuff. So as we kind of wrap this up, guys, I know we've covered a lot, gone down a lot of little rabbit holes here, but I know the idea is that, or I know that your feedback is you take 1 or 2 things, and that's what triggers something, a change in you. And I really hope that, I've really covered lots of stuff in this, and I'm going to make sure you get all the recordings. Some of them haven't been processed yet. People are off and what have you. If you want the recordings, you can email me. I'll absolutely want to get you the recordings so you can go through again and really think about how you're going to set your September up to give you that momentum for Q4 and running into 2026. Because if you start now and you give yourself this 30-day period in September, of course, do your other stuff, do your technicals, do your other learning, but really thinking about, I don't need to take much time each day to develop this mindset that I want. And again, it's future pacing of who you want to be, how you perceive price, how you perceive losses, how you perceive winners as a trader, and what do I need to do to grow into that. So just really think about that. And the 2 things I have for you, which are completely free, I'm giving them to you. I want you to use these and to help you. The trading psychology audio system, many of you have that already. Some great feedback on that. Thank you so much. All you got to do is reply to my daily email. If you go to tradersmastermind.com, register for that email. I know most of you are on it already, but ask for this. Armand, who's my really good assistant who helps with all the inbox and stuff, will send you a Google Drive link. You download the MP3s. There's 5 of them there. You've got the trading market awareness. You've got the binaural beats, 16 hertz, 30 hertz. You've got the visualization stuff. You might use one of them, and that's all that matters, man. Just one thing. You might be like, hey, you know what? I get so dialed in when I have those 30 hertz binaural beats on, or the affirmations before the trading day. And it might sound a bit woo-woo and a bit wee, but this, try it out. If you don't like it, it costs you nothing, right? It costs you nothing. But if it works, you go, great. It works for me. Thanks, Mark. Help me loads. All right, no problem, bro. And then the other thing, obviously, many of you have got this already, completely free again. Discipline tracker. So if you're trying to improve your trading discipline, it's a Google sheet. So if you've got a Gmail address, this works for you. There's a template here for it's all filled in some kind of things that you might use it for. The other here is that in fact, I won't waste time talking about it. If you put your email address and go to tradersmastermind.com, top right discipline tracker, put your email address in. That does mean you go on my daily email list. You can unsubscribe if you don't want to receive a daily email from me. That's absolutely fine, but you still get the tracker. And on there is a video actually on the thank you page that explains how to use the tracker. I've done a kind of little walk around video. Again, completely free, yours to use. Share it if you like. I'm not bothered, right? I want you to become a more disciplined trader. So 2 tools there and some ideas, obviously, from this webinar series to help you improve your mindset. Because I know there's the stumbling block for so many traders, right? So if it helps you, then that's great. Okay. If you have any questions, ladies and gents, I'm more than happy to take them. Thank you to Pepperstone, of course, for partnering with us and allowing us to talk about things that I think are going to help traders move the needle the most. And the sun is blaring at me now. I'm not sure how many more weeks we've got this beautiful sunshine. Okay. Gary Portugal says, the whole August series was great. Thanks for doing it. Thank you, Gary. Appreciate your feedback, pal. I've really enjoyed doing this because I'm lucky enough to be able to talk about stuff that I like to talk about and things I think is helpful. But I think the Stoics are really, really interesting, right? And I think that a lot of the Stoic principles apply to trading so much. Obviously, didn't intend it, right? But it's that mindset, and sometimes you've got to have a north star in trading, and sometimes people use other traders or mentors as kind of aspirational figures. But for me, it was always like, okay, this way of thinking is so apt for trading. Then, and when I started thinking more like the Stoics and taking some of the principles on, and okay, some of it's not, you need to take all of it on board, but I really think that it just helps sort of helps you realize that you're a human being. A human being's fine. And there's another thing, Gary. I don't know if you do this already. Maybe you do. Is very often you can use ChatGPT and you can say to yourself, "Hey, I'm struggling with this. I know it sounds silly, right? But what would Marcus Aurelius say about the way I'm thinking about my trading now? Or what would Marcus Aurelius say about my performance? Or what would Epictetus say? And you can ask it to reply as a Stoic, and honestly, sometimes it puts a different. This is all about putting a different frame of reference on things because with trading, we're so bogged down in the P&L. We're so concerned about our performance. We're so concerned about what we're doing wrong. We're doing wrong. And I often get this if I do some work with traders and I say, listen, that's a one thing you're focusing on. You're doing this really, really well. You're doing this really, really well. We can deal with that, but don't put all your energy into worrying about that one thing because actually, like Linda said, you're making an absolute mess of things, but it's okay. And I think that's one of the biggest kind of breakthroughs as well with the Stoics is that you don't have to be perfect. And when you kind of read some of Marcus Aurelius' meditations, which are a bit thick and heavy at times, you recognize there was an imperfect there, an imperfection there, should I say. Robin says, hi, Mark. Thanks for another great webinar. Thank you, Robin. Appreciate your feedback as always, pal. I work in define risk blocks. How would you suggest layering the Stoic drills like mantras or visualization so they don't become clutter, but actually strengthen that block structure? So working define risk blocks of saying, hey, this is my risk. I'm going to trade within that block, and then I'm going to move on to the next thing. I think the thing to do, Robin, is to highlight for you what the challenge is. Like, what do you, and this is, I think, the key for money traders is to, where's your, what's the biggest hurdle for you? Or what's that biggest domino that I like to say that if you knock that over, other things will fall into place? Do you occasionally trade on tilt? Are you kind of hesitating? What is it? And the idea then, I think, with visualization is, and many people poo-poo this, but I'll disagree, massively. I'm not kind of massively fully into any of this or everything to do with that, but I really do think this is effective, is before the trading day, just kind of visualize, hey, how do I want the trade to look? How do I want the trading day to look? Sorry. What are the things that could derail me and how would I deal with them? So that negative visualization of, we're not overdoing this, Robin, and we're not kind of spending hours in front of the screen and worrying about this and, preparing and doing some sort of morning routine where you're doing this, the 50 press ups, you're drinking some sort of weird concoction, you're cold plunging this, do one or two of these things, right? And I think that the visualization is that you are visualizing, saying, hey, I'm working with this risk block. That's what matters. I don't care about the individual outcome. I don't care about this block, right? And the reason you're doing this is because of X. And my ultimate outcome here is that I work within these risk blocks so that in the future I don't have to be concerned with the individual P&L. I can be concerned with my process. I'm becoming process focused and not bothering about things like this. And the mantra, I think, is just reminding yourself, hey, why are you doing what you're doing? Like, hey, I'm doing this for this. This is why I'm doing this. This is why I'm doing the risk blocks, and it's to solve this problem. So this is where we're headed. So everything should be aligned with solving that problem. Um, uh, Bruce says, thank you for your time in this series. It's given me a lot of work on to think about. I appreciate that, Bruce. Hopefully, you found some value there. Peter Daniel, good to see you, buddy. If you become emotional, check and triple check you have seen your strategy. Use something that is not emotional, i.e., your strategy, to calm your emotions. Peter's absolutely spot on as always. It's the first port of call if you are emotional is to double check that you actually have a reason to be emotional. What do I mean by that? If we went back to that example of the drive and pull back, is your trading strategy, does your trading plan say you should be trading that? If it doesn't, then you can't blame yourself for not taking it. If it does, and it says, hey, I wait for a break and a pullback and a retest and I take the short, and you didn't, and you got frustrated, then there's an emotional reason. It's because you didn't have that. But as Peter says, if you haven't got your strategy defined, many traders I see make the mistake of saying, I missed this, I missed that, I didn't get on this, I should have done that. Yeah, but if you've not planned out, how can you expect yourself to? So that's a real good kind of point there. Robin says, how do you harden conviction when market conditions suddenly shift, like when an index starts shadowing another without abandoning your proven system? This is more of an operational thing, Robin, and you kind of have to say, listen, have I seen this before? And if you mentioned there kind of shadowing another, so if you're trading like a correlation, it breaks, it doesn't break, you've seen this before. So how do you react to that? Do you um, back off? Do you carry on? Is this normal? Is this abnormal? This is where experience comes in, and you know, depending on whether you're trading a fully mechanical system or you have an element of discretion in there, that's where the element of discretion can come in. So let's say you have a rule-based system with a kind of discretionary topping, let's say, you might then say, actually, you know what, I need a little bit more confirmation, or I might reduce my risk on this trade. And that's the discretionary element, adjusting perhaps the mechanical system. If it's purely mechanical, you've got to make a commercial decision, pal, in the cold light of day, whether you're sticking with it or not. And that's always the challenge when you're trading a mechanical based system, is it's not working. But that's when we kind of go into, well, is it historically, is this kind of in line with what happens? Do we have these periods where it kind of doesn't really work and stuff like that? So it's, and also the one thing I would say, Robin, is this, is what's the worst case scenario? The worst case scenario is get stopped out. How much does that cost you? What's your maximum loss? Once you're comfortable with that, if you still believe in the system, then you say, listen, I'm prepared to see this much risk, and then I'm going to readjust and reevaluate. So whatever that number is to you, multiple losers in a row, whatever drawdown, then it becomes so much easier for you to reframe. Hang on a second, what have I got to lose? Nothing. I might lose this trade and it costs me this much. I might lose 10 trades, it costs me this much. Am I okay with that because I want to see how the system proves itself or not? And then I'm going to reevaluate. Yes. And the important thing there is to have that drawdown point where you do the reevaluation, because I think that helps you mentally go, this is not going to carry on forever. I'm spending another X worst case scenario finding out whether I think the system's going to recover or not. If it doesn't, I'll reevaluate and reassess and make another commercial decision. If it does, great, we're happy. But I think that putting that kind of limit on it really helps kind of from a mental perspective as well. Susan says, thanks once again for a great webinar, Mark. Lots of points actually hit home. Thank you, Susan. Appreciate that. I'm glad that you could get on this one this time. I think it might have been you, if multiple Susans, maybe that there's some technical problems, but it's all sorted now. And a final comment here from Thomas. Thank you, sir. Your content is helping. I appreciate that, Thomas, and I appreciate all of you, ladies and gents. That was the August Summer Stoic webinar series. Take it on board. Take some of the stuff that you think helps. Run with it. Try it for just a few weeks, man. Just see how you get on with it. So easy to get inspired and motivated and go away and do nothing about it. But if you just stick with it for a bit, you'll see some breakthroughs. As I said, a 30-day lag normally. But think about it now. If you do it now, by the end of September, going to Q4, you'll have some of those biggest things ticked off and really ready to put your foot down and get some momentum. So yeah, back again next week. New topic, new theme. Won't reveal just yet. Keep it on your email, and I will let you know what we're going to be covering in September. Thank you, ladies and gents. Goodbye. Take care. Keep the risk managed.